Welcome everyone. We'll start our lesson 2. Today lesson we'll go through our LO2. As you know, my name is Anjum Sata. Please, if you have any question, drop me email anjum@university.co.uk and I'll try my best to get back to you as soon as possible. Today lesson key focus will be our LO2, what we and we'll do a bit recap, what we learned in the previous lesson. So we'll start, please. If you okay, so our LO2, which is be able to assess the impact of the relevant taxes in a given situation. So we'll discuss about the tax planning, and we'll go through the few examples, how we can plan our tax. Leslie, in our previous lesson, we had a discussion about resident, who they are, what sort of the taxes, how long they stay in the UK, domicile, connections with the UK, employment in the UK, and their income level and tax, rates we discussed. We discuss employment, saving tax, and we discuss about inherent tax. Please, whichever year you want to use for the sake of your example in your assignment, that's absolutely fine, so try, but it's better to try the latest as Finance Act 2023, Finance Act 2024, because, that will help you to address. So we need to be make sure we'll do. Okay. Open Tuition is one of the website which I refer you, and FT, the financial tax, our tax on fundamental of tax is good to be one of ACC exam which you can download. I shared with you the book, and all if you want each chapter of the lectures those are recorded available there as well. It's on public domain, that's why I'm sharing with you. Okay, we already discussed about M of the unit, so today key focus is about our LO2 learning outcome 2. So please, we had a discussion on scale 1 to 10. Please, when you do, we need to make sure we look around a tax return, the current knowledge about tax return, so it's good to be reflect how much we know already about taxes. Today lesson indicative content, what we're supposed to be key points we learn, alternative ways of personal business outcome of learning, of the different tax consequences, to include the comparison of alternative scenario assessment, how the tax affect the financial decision. Incorporated, uncorporated businesses will go through the corporation, which is mean corporation tax company, and the individual and partnership, and assessment of how the taxation affect financial decision, advantages and disadvantages of different course of action. That all will be in our discussion. Okay, so please, we had a discussion about the rates. So always good to be look around. So these are the rates. If you are earning 12,570, which is personal allowance, no tax. If you earn more than that, up to £1 to 37,700 is 20% tax. If you earn more than that, then it's 40% tax. Even if you are earning more than 100,000, so every pound extra, 50% of your personal allowance will be reduction. Every £1 50 pence will be. But if you earn 125,140, your personal allowance will be finished. Should mean that you have to pay the tax on the all amount. Okay, then we look around the dividend rates and additional rates, all so 33.75 and 8.75, all we need to be considered. Okay, so basic saving income nil band, we can look around 1,000 if it's a saving income, and a higher tax rate payer is 500. Dividend income nil rate, all the taxpayer is 1,000. Okay, so we mentioned personal allowance, transferable amount. If your husband, wife, and partner not working, 1260 you can transfer as a personal allowance. Okay. Then please, we need to be look around where adjusted net income or more the personal allowance, which we need to be look around. Okay, child benefit where income between 50 to 60,000, they charge 1% of the amount of the child benefit received for every £100 or 50,000. So 100% property income costs are subject to the basic rate restrictions. 100% of the property income finance costs are subject to the rate of income restrictions. So we can look around the relevant basic level of CO2 emissions, percentage of applying the petrol, cars, and diesel, and various others. So we need to be look around 51 gram, 54 gram per kilometer, 55 grams per kilometer, and 2% percentage applies to the electric power cars with a zero CO2 hybrid electric motor cars with CO2 emission 1 to 50 grams. That's which we need to be look around the emission level. Okay, electric range, cars 130 miles or more, 2%, 70 to 125 miles, 40 to 60 miles, and so on. Car fuel benefit is 27,800. Company van benefit, van benefit scale charges 39,160 pound, and the van fuel benefit it can be 757. A van with the zero emission does not give rise the benefit. So these are benefit in kind need to be included back to. So individual saving accounts. So our investment limit is 20,000. Rent roof relief. If a rent roof relief limit is 7,500. So these we need to look around the rates, please. Okay, pension annual allowance is 40,000. Minimum allowance is 4,000, and income limit is 240, and lifetime allowances. So these we need to be look around, please. Motor car, new car with the CO2 emissions. We have to look around the corporation tax is 19% from, and small profit rate 19%, and man rate 25%. Lower limit 50,000, upper limit, and we can look around the marginal relief for this area. That's quite crucial if we need to. Quarterly installment profit threshold 1.5, and then value added tax 20% up to registration limit is 85,000. You can deregister if your turnover is 83,000. So day late, if you penalties, yes, that's we need to look around 2-4. Inherent tax, which we need to be look around the nil band, resident nil band. And that's which we need to carry on. Excess death rate, lifetime rates, that's which we can. Inherent tax tipper relief, which we can look around 3%, but less than 4 years. 4 years, less than 5 years. The percentage of reduction in inherent tax, that's which we can. Capital gain tax, which we need to be look around annual exam limit 6,000. If you have the gain, then of course we can look around the normal rate. Residential properties lower 18%, and higher is 28%. Investor relief we can, and then we can look around the rate 10% after the relief. So business asset disposal relief and 10% rate. So these the class of insurance 1 to 12 570, and then if you're earning more than that, national insurance contribution 12%, 2%. Again, please, 1 to 9,100 implied is 0%, and if your earning is class 1 is 13.8, employment allowance is 5,000, and we can look around class 2 and class 4. Okay, deliberately concealed penalties can be, so we need to be make sure careless these apply to. Okay, 2.1, we can calculate the taxes in the given situations, base rate, additional rates, and high rates. Okay, so let's please we look at example. So for the tax year 2021, Joe has the salary which is 46,500, saving income 2,000, and individual income 6,000. During the year, he paid the interest 300, which was for the qualifying purposes. Joe employer deduct 6,800 in the pay as you earn, so through salaries, and the income tax is payable. Joe is so let's please we look the employment income, saving income, uh, dividend, uh, interest paid, which is on, and then the personal allowance. So please, that's we need to be look around the total income through non-saving, saving, which is mean employment, and saving 6,000, dividend, and then total income is 41,700. Okay, so what we need to do, 12,500. So 20% tax up to 37,700. Yes, 33,700, 20%, and then will be 500, 0%. And those, if you go back to look the income first, please. 33,700 is the employment income. So that tax will be up to 37,700 is a 20%. So we are looking. So because it's the higher taxpayer bracket is false because it's above than 37,700 after the personal allowance. So this is 2,500 is no tax, plus 1,500 will be tax, Okay, then dividend income. So we have to look around in the bracket of, so you will see here, which we calculated 33, 720%, and then 500, which will be 0, and 1,500, which will be 20% tax. So first 2,000 on the dividend is exempt on higher, and then 4,000 remaining will be tax, 32.5, because the higher income, not additional rate will apply, the higher rate will apply. So tax liability will be pay why being paid, and 1,540 pound is the tax still to pay. So that's which we can look around. Okay, let's please we look the second 2.2 is analyze the tax advantage disadvantage in a different course of action. So Donald and Teresa are the married couple, and the regular income as follows: salary 60,000, Teresa's salary 18,000, interest 2,000, dividend 9,000. So in that situation, Donald is the higher tax rate with the income is 47,500 after 12,500. Teresa's basic tax rate with the taxable income 16,500. So 18,000 plus 2,000 plus 9,000. So minus 12. So in this situation, it would preferably the case, the tax planning purposes would be advisable. See, any investment income could be moved to from higher tax rate to the basic tax rate. So Teresa is the basic tax rate payer, so we can move to the Teresa, and that will help to save the tax. Okay. This, however, is not possible as the Donald only income is the high salary. So induction, the nil rate band is, however, means that the above the example of the saving can be achieved 500 and would be made to Donald and therefore the saving income nil rate band 500 that is currently being vested in Donald. So Donald can save on because it's a higher tax. So first 500 is exempt. So then the income being taxed 20% increases saving income excess of nil rate band is 1,000. So that 1,000 will be 200, 20%. And if transfer 500 to her husband, he would use the nil band and she would save, 100 pounds. The second transfer would be sufficient share move 2,000 of dividend income from Teresa to the Donald. So both use, the dividend income nil band of 2,000. So both will be well off, in that situation, and the family can save the income cheap. Tax planning is illegal, which we just mentioned in the previous. Then 2.3, we need to be look around assess the statutory obligation imposed, the given situation income application of non-compliant. So filing date, we need to be look around on tax return online 31st January of the following year, 3 months after the notice the return was issued, and 31st October following, end of the tax year. Penalties for the late filing, initial penalties is 100. Return more than 3 months, the late, which is 10%, 10 pound per day, 90 days. Return more than 6 months, but not more than 12 months, 5% of the tax due, and return more than 12 months. So, late, the penalties can be 100%. 75%. So we have to look around the penalty that can be if we don't submit here. So we need to be very careful. Guys, I included the link for you. There are plenty of examples. So what you need to do, please copy the link. Look around different scenario to develop more understanding about the taxes and the tax planning is illegal and how we can plan tax. So that is very very crucial, which we need to be look around in accordingly. So we need to be look around accordingly. Okay, then we look the return. Penalties imposed, inaccurate return, careless, deliberately as an arrangement of conceal amount of penalties, which we can look around the careless 30%, 15%, deliberately not concealed, and deliberately not concealed. So we can look around the in accordingly. Penalty for the late notifications, amount of penalty, we can deliberately but not concealed, deliberately but not concealed. So we can look around the in the light of a record must be kept up to 6 years, including current year. The payment amount must be made 31st January of the tax year. July final payment income tax must be paid 31st of the following year. So we can look around 50% prior year's liability less the tax suffered at source. We need to make sure we'll carry on making adjustment accordingly. Otherwise, we'll have to pay the more charges. So late payments, 5% unpaid taxes, not more than 5 months after the penalty dates. More late payment tax, 11 months, 15% of unpaid tax, 11-month penalty dates. So interest, which is normal due dates, which we can, and the final payment, which will carry on looking into the perspective. Okay, non-compliance, may result to the litigations or other consequences for the client, may have a client, affect the financial statement importance, such as non-compliance at the wider interest and the which publication. So we have to make sure tell the best interests of the public, so all the money and the taxes due, which should be, and we need to be look around the 5 professional code of ethics in line, those are the businesses which we need to be followed as a member of professional bodies. So assess the effect of the taxation on the financial decision. Yes, your business may become, affected by the sector taxes, which means, it is important to ensure comply with the sector tax obligation as well. There are certain sectors, your costs are blog post, which we need to be look around. The taxation can affect your businesses. So implies don't, often need to be spent a lot of our time thinking about the taxes, national insurance that directly deducted from the gross amount of the salary and leaving each, implies with the reminders. However, the running your own business is very different, and it is important that you take the responsibility for paying the correct amount of the tax on your business profit in line with the national income. Corporation tax or the business tax is charged on the profit for the company make, and the corporation tax is similar like an income tax for the company. So meaning the as soon as your business start, making profit, it need to be start paying the corporation tax the correct rate. Business taxation affect, business cost, for example, rise in corporation tax has same, effect on the increasing the cost, which can lead to the raise the price within the business. And other business taxes include environmental taxes and all, which we need to be make sure will carry on. Okay, so please, in VAT value added tax, we need to be look around different, we have the accounting schemes which we can look around. Annual accounting, which is mean one tax return in a year. So 1350, which we can look around an annual VAT return 2 months after the year end. So must have the scheme, tax turnover previously 12 months exceed 160,000. So inter 4 and 12 pays and 110 previous, years liability and pay the balances of the VAT. So we can look around the only one return each year's payment, spread evenly throughout most of the year. Disadvantage monitor suppliers to ensure, the turnover limit is not exceeded, that, the payment is based on the previous year's turnover. Okay, so cash accounting, which we need to be look around, accounts for VAT on the basis of the cash paid and received annual taxable return must not be exceed 135. So we need to be look around 1,350,000, and we need to be look around the joint all the return and the payment must be up to date. And they must leave the schemes, if the tax if the turnover really is based on the turnover 1.6, so we have to look around the cash accounting. Cash accounting can be used with annual accounting. So annual accounting means once return in a year, and cash accounting, bad debts can be only when you receive and make the payment, then you do the VAT return. The corporation tax is the business charge and the profit of the company, which we just mentioned. Cash accounting flat rate is the one rate, so you don't have to keep the record of the purchase. It just you pay the flat rate on your sales, and then of course, that rate normally less than your 20%, it can be 12%. So you have to look around. Late filing, so of course, the business clear the distinction criteria. We can add the example of late filing, the fees which we early mentioned, so we need to be make sure we file the tax return on time. Due date, the large company must, pay their corporation tax in an installment. Other companies must, pay their corporation tax 9 months, and 1 day after the end of the accounting period, and quarterly installment. Those we need to be look around. Upper limit, which we need to be multiplied by 12, and we need to be look around relief, 51% of the group, and prepare account for the 9 months, so we need to be portioned into tax, and always we need to be look around in those perspectives. Small, medium size, we need to be less than 500 employees, the turnover 100 million, and the balance sheet is 86 million. and they relieve 230% of relief, create an increase on losses and surrender the losses to the research and development. That's, which we can look around. Three scenarios: the commencement date, ongoing businesses, and succession dates. Those we need to be look around these perspective. And the first year in which the business commence, assess the profit within from the date of the commence and the following, the fifth, and then rest we can move to the second year, and we can look around: is there any accounting period ending? Is it the 12 month longer? Yes. Is no? Is the less than or greater than 12 months? Then we need to be separate between, it can be fall into two financial years. Third year tax will be the 12 months, of course, that will be, and which we can, and overlap profit, the same profit twice. This is known as overlap profit. Get relief on overlap profit on the uh, a succession of business when you're closing the year in which actually sees the trade and assess, the previous, assess less overlap profit. So these we need to be look around the statement which will carry on taxable profit, interest, income, property, businesses, chargeable gain, and less, qualifying donation, and so on. So please, we need to look around the interest income on the non-trading scheme. Property income, all the property business income is treated as a single source of income and calculate, the same way as a trading profit. We need to be look around accounting period treatments, so we need to be look around in term of the 12 months. Yes, so overlap profit and adjustment we need to be make. Please go through the chapter 15 of computation, which I mentioned and gave you the link, of open tuitions, and plus I gave you ACCA links to look around. Good few examples for the tax and the tax calculation. Please, anyone, any question if you have, you can ask, otherwise we'll keep up to here. Tax planning is illegal. We look, as much information from the client we can get, and then we can plan the tax, for the clients, accordingly as any, so we need to be make sure. Thanks for attending today lesson. Hope, I'll speak to you during our next lesson, and have a wonderful weekend. Thank you. Bye now.